Hello. Welcome to the end of year stream. I can't imagine anything else could happen between now and December 31st if you come on this thing. So, how's everybody doing? Hey, Chris. Hope you're feeling okay. Good to see you. Tom, Glenn, I got everybody here. The whole gang. What a week this has been. The last time I did a YouTube was last Tuesday, I think, or the week before last. But the whole purpose of my last YouTube was telling everybody how much I liked AYX, AYX, and how I thought it was going to 60. The stock was 42. I also said I thought the odds of a buyout were low now, mostly because of the cheap debt that AYX has and the move in the 10-year at that point. Fast forward a week and a half or a week from when I did that YouTube, and the markets went gangbusters. And Reuters reported on Thursday of last week, of course, that AYX was in advanced discussions to be acquired by Insight and Clearlake in a partnership for over $50 a share and about $5 billion in enterprise value. The initial Reuters headline said about $50 a share, and it was changed in the article to over $50 a share. This is Thursday. So most of my position was in call spreads, mostly 40-50s from everywhere from December through next January. I also own 40-55s and 40-60s. I own some 35-50s. I own so many different call spreads, it would make your head spin. Different tranches. And I own common. And on Friday, I did do a YouTube, but I put on a bunch of 47.50 $50 call spreads in January and February. The Januaries were like $1.05 and the Februaries were like $1.35. And I did this thinking it was the best trade of my life, because with February, I figured even if there was no deal, we'd get earnings. And as I said in the last YouTube, I think they're going to blow out Q4 earnings. So I get a free look at a deal happening, which I put at 95% chance of happening based on the totality of that Reuters article on Thursday. But if there wasn't a deal, I would at least get earnings. And then with January paying $1.05, I thought, given I was 95% of a deal happening in the next few weeks, I thought 3 weeks max, more likely I thought it was going to happen on Monday. And given I was only paying $1.05 to make $2.50, as long as the deal was 51 or higher, it would trade 50 by January OPEX. I thought I was robbing market makers, and could not be more excited to put more exposure on, even though I had over 100% delta adjusted position in it. I think I was 120% going in over the weekend. So I had like 5% or something, but still I put more money up. We then get our deal on Monday, and the deal was for $48.25. And I was very depressed. Now, I didn't lose money on it on Monday because so many of my call spreads were 40-50s. They were marked at $6.66 over the weekend. And they went up to $7 or $7.25 on this deal. I did lose money on a lot of different call spreads. I lost money I owned some January 25s that were 40-50s, 40-55s, and 40-60s, and they all went down. My June 40-55s went down. And then I lost all my money virtually on the Jan and February 47-50-50 spreads. My initial thought was that this is getting robbed, and Dean is going to be rolling his position, and they're going to steal this from us. And somehow they're going to do this with letting Dean vote his shares, which is 49% of the outstanding vote. And it didn't make any sense to me how there wouldn't be a majority minority vote, which there isn't required, it says. But it also made no sense to me that nowhere in the article did it say that Dean was rolling. And Catalyst advised New Relic. And in the New Relic article, in the New Relic press release, not an article, it specifically mentioned when the founder was rolling his shares. And here there was no mention of it. After the market closed, they put out some filings, and it's pretty clear from the filings that Dean is not rolling his stock. He's selling it all at $48.25. Now, I don't know whether or not Dean is purchasing shares in the new company in a side pocket deal with Insight. Often when these private equity firms do these large deals, Maisie, they don't put it all up from funds that they control. They let their LPs and outsiders invest directly in the deal. I'm pretty sure that would be illegal here. He would have to disclose if he was investing in the deal. We won't know for sure until the proxy comes out, but I'm virtually certain that he's not investing anything in the deal, and he's cashing out of all of his shares. You know, that is really puzzling to me. And that makes me inclined to think that I got bailed out here, that this is a shitco, that 4 times 2024 sales in a competitive process is the best they can get when competitors, New Relic just got 6 times sales, and this got 4 times sales, and this is supposed to be growing faster than New Relic. And this also happened now in a better environment than when New Relic got sold in July. So we won't know all the information until the proxy comes out. I believe this deal will close pretty quickly. I looked at, a half a dozen Catalyst advised software deals that were all domestic, and they all closed between 10 weeks and 14 weeks. And the only reason why New Relic took 14 weeks was there was a 45-day go shop period, and they couldn't file their preliminary proxy until day 45. Most of these firms file their preliminary proxy in like a month after the deal is announced. Then it goes effective 2 weeks later or so, and then there's 30 days for the shareholder vote. So I own AyX still. It's humongous. It's literally like 175% delta adjusted position now. I bought more common at 47 even Monday. And my thought process for buying more common at 47 was very simple. At the time, I thought it was theft, and I wanted a free look into the proxy and the possibility of lawsuits if Dean is rolling his stake. Today, I still think that it's very attractive, and I'll tell you why. I'll walk you through it real quick. At 47.18, you are going to make $1.07 when the deal closes. $1.07 divided by 47.17, or 47.17 divided by $1.07, whatever the hell it is. I'm doing it right now, just do exact. We'll do 47.19. 47.18 is 2.47%. 2.47% will be your gross return for this to close. I believe it will close, like I said, between 10 and 12 weeks. There's 52 weeks in a year. If it closes in 10.4 weeks, 10.4 times 5 is 52. Basically, you can multiply 5 times the 2.47% to get your IRR, assuming it closes between 10 and 11 weeks. And 5 times 2.5 is 12.5. So it's a little bit less than a 12.5% IRR if it closes between 10 and 11 weeks. And it goes down to like a 10% IRR if it closes in 12 weeks. Okay. So you're getting a 10 to 12% return on something that I truly believe has zero risk in closing. There's no fraud here. Insight is on the board. So there's nothing that's going to happen that can be a material adverse clause between now and close. I mean, a nuclear bomb could go off and they would have to close this deal. So I'm getting double what my margin rate is in an IRR for something that has no tangible risk. And in return, I get to sit around and see whether or not another bid comes by, which I don't think it's very likely, or there's lawsuits. Now, why don't I think it's likely another bid will come? So the first reason is there was an article in September, which was kind of a we're open for business sign to any private equity firm that was interested, right? And I'm sure we'll read in the proxy that many did inquire after the September article. So that's the first reason. The second reason is Dean doesn't appear to be rolling and he's selling his entire stake. So Dean would be incentivized to get the most money he can get. And they did not put a go shop in the provision. So all that means is if someone else does buy this, they'd have to put a bid in before the shareholder vote, and the buyers would be due the full breakup fee if the deal doesn't get consummated. The breakup fee, I believe, I forgot what it is. I think it was $120 million, which is like $1.50 a share. So is it impossible someone would be willing to pay that and then bid more? Yeah, that's not insurmountable at all. But my thought is that it was fully shopped. This was the best bid, and it's just going to get sold for this price. But it was sold for such a cheap price at 4x sales that, in theory, another private equity firm could come in and pay 5x sales, which would be another, $15 or $12 a share. A lot more money. There's a lot of room here for more money on the table. And I'll stick around to see what happens. I will probably sell all of my common, which is about a fourth of my delta, in January after the proxy comes out. And then I will sell all of my January options the day they expire. And I'll sell all my February options the day they expire if the deal hasn't closed yet. But I'll keep everything else until the deal closes. I don't think we're going to see February earnings, which is pretty amazing. They would report earnings usually in mid-February. The deal most likely won't be closed by then, but they don't have to report earnings legally until mid-March. So if they are stealing this, they'll probably keep earnings from us, and we'll never get to see the blowout number they put up in Q4, which I think they're going to put up. But then I'm also very confused by this price. So maybe we'll learn something in the proxy about how Q4 is trending. And maybe that's the reason why this is the price. So why did Reuters report on Thursday more than 50 and 5 billion, and it was 4.4 billion and 48.25? We'll know for sure when the proxy comes out. It was either completely made up by a banker, or it was above 50 at that point, and something came out in due diligence or at the last minute that made them take a few dollars off the share. But that's really not likely. It's much more likely that the price never got above 50 and it was completely made up, not by Reuters, but by some banker that leaked it to Reuters. And it's infuriating. And I have no idea how they get away with that kind of stuff. It should be investigated, and it should be securities fraud. Because if it's made up, if there really was never a bid above 50 and then it got readjusted back down, you're just allowing people to leak things, to make up things to journalists to manipulate the securities market. It's wrong. My post-mortem here was that, for those of you who don't know, I did not get big in AlterX until after May, when it blew up to 37. And then I didn't get gigantically huge until after it blew up to 30. So this was a huge winner for me this year. Okay. I had a very small position above 50 going into the May earnings. I'm pretty proud of what my analysis has been. since May. My biggest mistake here was that they didn't bring down guidance after the May earnings, and that guidance was unattainable. And I obviously should have waited until the blow up in Q2 to buy. But my thought process was at 37, it was so cheap that they didn't have to do 25% ARR. They could do 20, and it was still, a great company. But the market didn't care, and they needed the reset to happen, and that's why it went to 30. The other post-mortem, if this does get sold for 4 times ARR, is I was, grotesquely wrong about what the value of this company is, by a large margin. I mean, I would have put it in the 6 to 7 times ARR range, at least 5.5 as a public company, not even with a change of control premium, that it got sold at 4 times. So, me being a tourist in software, that'll show you that, it was priced much closer to shitco levels than really sticky, sustainable software levels, even though the numbers are all there with the net retention rates, and it's a $1 billion business. It's very confusing to me. So look, if we do it's very, very rare to happen. Private equity firms don't do things hostile. So it would have to be a friendly private equity firm approaching the company with a higher bid, which they could totally do. But they would have already been there. They would have already been in the mix, I think. The only thing that I could think of is they'll be shocked at how low it went for. And now that the debt markets are opening up and, TLT is back to 899, there's a lot of animal spirits right now in the market. So it would shock me. It would surprise me, but I wouldn't be like, oh, wow, I can't believe someone wants to pay $55 for Alteryx, because it's worth so much more than it's trading at. So I look at it as a truly free look. The deal's not going to break in the next 5 weeks for any reason. Again, if a nuclear bomb goes off, all spreads widen. So it would go down. No question. If the nuclear bomb goes off, we probably have a lot of other problems to worry about. But yeah, I like it. I like it here. I like it as a place to park money. I like it as a place to use margin. There's not investment advice. But so it's been really bittersweet for me this week. I think that I nailed it. I predicted it would be sold before they ever put out an article in September. I emailed the founder and the company in mid-August urging a sale and detailing the reasons why. And lo and behold, it's sold now. I of course did not do that, and I was not responsible for that. But it feels good that I did sniff this correctly. That this company was materially undervalued in the public markets, and they're going to make, the private equity firms are probably modeling a 25 or 30% IRR pre-fee. So they think it's undervalued. The only question would be is why didn't any other private equity firms think it was worth more? So I'll take some questions if you have any questions. Yeah, Glenn, I kind of already touched on that. I mean, it's clearly was probably some sort of banker leak that did that, not some fund that was trying to manipulate it. I don't think Reuters and these journalists don't usually take those kinds of sources for their articles. The author of this article has done many articles where the Catalyst has been the deal maker. So she has a connection with Catalyst, and it likely came from Catalyst. But until we read the proxy, we'll never know exactly what happened there. If there is an overbid, words cannot describe how happy I would be. But I'm not counting on it. I'm not counting on it. Let's talk QURE. QURE. They had their Huntington's data yesterday, and the stock blew up. So what happened? So from a biological standpoint, biomarker standpoint, it's exactly the same data as that they did in June, which blew up the stock. Right? There's no biological evidence of the drug being active. That's usually pretty bad, but we knew that. So what made it go down? I think it went down for 2 reasons. One, I think people like me were hoping this was a very clear-cut data release, so that either From an efficacy standpoint, it shows it's working really well, like very stable in both the high and the low dose cohort, or they both sucked, right? You want them both to decline rapidly. If one or the other happened, they cut the program, the burn for the program stops, and you could move on to the other 3 drugs in the pipeline. So what did they show us? They showed us that on the high dose cohort, they actually improved over the last 6 months. But in the low dose cohort, they declined, similar to what natural history would show. The company spun this as there is a dose effect. And there very well might be, but it's way too soon to know that. If 6 months from now, we see the high dose cohort stable or improving, and we see the low dose cohort either stable or declining, then you start painting a picture that says that the high dose cohort has some efficacy in it, no matter what the biomarkers say. And look, you can go listen to the conference call. They had experts on that have been doing this for decades that explain why there might not be a biomarker working. Bio Twitter has already decided this drug is worthless because they don't see anything in the biomarkers. I bought a lot more stock yesterday. I think that the setup is super interesting here. So now that this is over, in the next 6 months, you'll have 2 things for sure, and possibly a third thing. So the first thing is you'll have an FDA meeting in the first quarter. The odds the FDA tells them to file for accelerated approval on this data is virtually zero. There's no biomarker data, and the efficacy data is far from conclusive. And you're only supposed to get accelerated approval if you have biomarker data. So I don't see it, okay? But maybe the FDA gives them some sort of feedback that says, if you can show us over 4 years or 3 years that from an efficacy standpoint, the high dose is stable, we're open for full approval, even though this wasn't a controlled study. That's how bad this disease is, okay? You really can't run a controlled trial here. You'd have to keep people on the placebo side for years. And it's a devastating disease. So there's really no way to do it. You have to kind of do it against natural history. And it's tough. The second way you win is the June data that's going to come out. And there's more than a 0% chance that June data shows that the high dose cohort is stable or improving. If that happens, I think the stock could double. Because at that point, you have to ask yourself, is this drug active? And we're not talking about an N of 1 or 2. I think there's like 12 patients on the high dose cohort. And there'll be more as time goes on. And then the third way you can make money on this thing is, of course, like with everything, it just gets sold, right? At some point, management might test the waters to sell the company, given how significantly undervalued it is, just relative to cash and the drugs in its pipeline and manufacturing, et cetera. Just to remind you, it has like $9 or $10 a share in net cash, and it's trading at $6.70. So worst places to put your money, worst places I thought I could put my money. I added, it's a pretty big position. It's like a 15% or 16% position now. And we'll see what happens. I think there's massive tax loss selling happening in names that are really being down this year, more so than usual, because you've had so many gains in the market that if you have a stock down 50, 70%, you kind of have to find places to offset your gains. So in QURE, in MagnaChip, I think both of those are set up to have a really good January or February. Now, MagnaChip's a little bit different, okay? MagnaChip's up a lot today. I have no idea why. It had a lot of volume yesterday, a lot of volume today. MagnaChip is a 8% position for me now. It was once like a 50% or 100% delta adjusted position for people that have been following me for a long time. MagnaChip is brutally painful to me. It's my biggest loser ever, dollar-wise and basis point-wise. And I have no idea if or when they're going to ever turn around their business, whether the OLED business ever gets turned around. So, until they do that, the stock's kind of range bound. I just don't see it going back up to $10, $12, $14 until they can show us that they can put up business in OLED. And I have no reason to believe that's going to happen, anytime soon. But if they do put up business in OLED, the stock will go up 30% in one day. So I only mention it because the volume is really strong. And again, this is the kind of time of year when you should be seeing really big tax loss selling there. Full disclosure, by the way, I'm selling it in one of my accounts, in my family account, as we speak for the tax losses. Not the whole position, but a decent amount of it. So, I'm on the sell side today in it as a very small percentage of volume. And it's painful to having to do that, but I took a lot of gains this year. So it's worth more dead than alive in that account. I think that's about it. It's good to see AMPY back up. I rebought the common there. I think I told you guys last time. Not a big position. It's like a 5% position. Everything else is, I'm planning on taking some time over the next month at least before I start going crazy again in the stock market. AYX was a huge, huge delevering event for me, right? I was running like 200% gross net, and it was 100% position. So when that comes off my book, I immediately delever to like no margin and no delta adjusted margin either. BBIO is my second biggest position, and I'm waiting to see what happens there with a partnership or a buyout. Then there's QURE, and then I have positions in AQN and AY, which are utilities. And then there's Roivant, and then there's Magnachip. And those are basically my biggest positions. I also have positions in BSM, ARDX, AMLX, and AMPY. Those are much smaller positions. That's my portfolio. Next year, I'm planning on focusing much more on event-driven stuff, not kind of your buy and hold traditional investing. I think the markets are now more ripe for that pre-event and post announcement. And hopefully taking less risk. I won't make position sizes the size I made AYX probably ever again, unless it's to buy a CVR like a day or two before the deal closes. Chris wrote, Reuters has screwed up a few deal-related articles recently as iRobot's EU process. That iRobot article was so weird. Different author, though. But yes, got it just completely wrong. Yep, I remember. They said that EU was going to clear it, and the EU did not clear it. Lots of great event stuff in 2024. Yeah, Chris, I mean, you're the master at it, honestly. So I'll be looking to you to push some things in my direction. I can't wait to see what happens with Save. I fully expect Save to win. I'm not putting on new risk right now. I'm taking a breather. I'm very happy to have AYX conclude so that I can remove all of the risk from my portfolio. Because remember, we're talking about call spreads that go all the way out to Jan 25. And I would have had to sweat out earning after earning after earnings to see those, come to fruition. And now I don't have to. So it's been a really good year for me. I'm up like 195% this year. I was down like 40% last year. I was up like 25% in 2021. And I was down like 20% in 2020. And I was down 10%, I think, in 2019. So I'm now back at my high water mark from 2019. And that counts the CVR, the BMYRT, at 0. BMYRT is a huge position for me. And depending on what happens there, it could be seriously needle moving. So I feel very fortunate how things have played out, even though it hasn't gone exactly how I expected. Obviously, if AYX was sold at 51 versus 48.25, it adds like 1,000 basis points to my portfolio, maybe even 1,200 or 1,300 more, but it didn't. So who knows? Maybe I'll get lucky. Maybe someone will overbid. And that's it. It's been a good year. It's been a tough year. Thanks for watching all the YouTubes and the highs and the lows, man, between Ocular and Alteryx and Sphere. I can't even remember what my other losers were this year. My biggest losers by far were QURE. I mean, I lost a lot of money there. Lionsgate's back up above 10. Good riddance. But it's been a good year. And I hope everybody made money. Thank you, Chris. And I hope you stay healthy. Oh, we'll definitely do a BMYRT event in Las Vegas. If you guys don't know, and we'll definitely do something at the Sphere, Chris, for sure. But maybe we'll plan it around a concert or something. That's a great idea. All right, take care, everybody. Thanks a lot. Thanks for all the kind words and the camaraderie. Bye.